when the metals start accelerating, that when the gold-silver ratio comes down and silver goes up faster than gold, that's when you're entering the acceleration phase. And that is normally led by silver. And I think that's what we're going to see now too. Silver has now moved up to $36. 35 was a bit of a critical resistance. I think we'll move quickly above $50, $60, $70 very quickly. And again, I'm not a speculator. I'm a long-term wealth preservationist, but I think silver is now an opportunity. But hold more gold than silver, but hold some silver too, because that's going to give you an interesting ride. And I think silver will go up manyfold, manyfold.
The gold-silver ratio has dropped nearly 20% in recent months, falling from a peak of 107 to around 88. This sharp decline signals a clear outperformance of silver relative to gold, often seen as a key indicator of momentum building in the precious metals space. Technically, resistance for the ratio is now observed at 90.42 and 98.06, while support lies at 82.74. A continued decline in this ratio typically indicates substantial upside for silver. Egon von Greyerz of GoldSwitzerland views the gold-to-silver ratio as a valuable signal in bull markets. Historically, when the ratio starts falling quickly, it marks the beginning of silver's acceleration phase. Silver tends to outperform gold in these moments, often leading the charge higher in a metals rally. The silver market continued to show strength during Friday's trading session, despite some volatility. Momentum remains intact, and there is growing speculation that silver could make a sustained push toward the $40 level. Any short-term pullbacks may act as attractive entry points for value-seeking investors. According to von Greyerz, silver's recent surge above the significant $35 resistance level has opened the door to much higher price targets. A move to $50, $60, or even $70 is no longer out of the question if the current bullish dynamics persist. While he still advocates maintaining a core position in gold due to its historical role as the ultimate monetary metal, von Greyerz believes silver currently offers compelling upside potential in the ongoing bull market. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Gold is the king of money. That's the real money, real money for wealth preservation, gold. But right now, we definitely see an opportunity with silver because we have over certain periods told our clients don't hold silver because it's too volatile. You won't sleep at night. But right now, the ratio has now topped recently at 100, coming off quickly by almost 10%. The gold-silver ratio. Gold divided by silver. And that's a measure of when the metals start accelerating, that when the gold-silver ratio comes down and silver goes up faster than gold, that's when you're entering the acceleration phase. And that is normally led by silver. And I think that's what we're going to see now too. Silver has now moved up to $36. 35 was a bit of a critical resistance. I think we'll move quickly above $50, $60, $70 very quickly. And again, I'm not a speculator. I'm a long-term wealth preservationist, but I think silver is now an opportunity. But hold more gold than silver. But this is an opportunity because silver is also, they say the poor man's money. You talk about tokenization. Silver is ideal for tokenization because if you have 100% proper operators with 100% backing of the metal, that is an inexpensive way of distributing physical silver to a bigger public, which cannot afford to go or find it difficult to go in and buy one silver coin at a time, maybe some. So I think silver is, but it's physical silver, of course. That's what we do. We don't do gold or silver. But now hold some silver too, because that's going to give you an interesting ride. And I think silver will go up manyfold, manyfold. And I stopped giving forecasts in any currency or any metal at all, because for the simple reason that it's meaningless. Because if you tell them a number in $10,000 $50,000, whatever. And, what's the dollar worth at the time? That's or the euro, whatever. That's really what counts. So just having putting a dollar value on something, measuring it in money that goes down by the day is meaningless. So therefore, I know that the metals are going to appreciate substantially more than inflation, and that's enough. You don't actually need to have a target by end of the year, whatever it is. It's useless to have that. But the multiples is going to be what's going to happen measured in paper money. Sorry, I just wanted to mention silver because it's important to understand also silver is now interesting. Most people don't understand that this bar in 1971 cost $14,000. $14,000. It's 400 ounces, 12 kilos. And that was when gold was $35 an ounce before Nixon closed the gold window. Now, today, that bar is worth just under $1.4 million. So that's up almost 100 times since 1971. And as we try to explain and keep telling investors, gold isn't going up at all. It's the value of your money that's going down. Nobody understands that. And the government doesn't want to tell you that because it does show their absolutely useless management of the economy. If they say, well, sorry, the value of your money is going down in your pocket. As Nixon said, the value of your dollar is still going to be the same after we close the gold window.
Egon von Greyerz notes that central banks are already quietly and steadily shifting out of US dollars and into gold. While they're not acting aggressively, keen to avoid sending prices soaring, the long-term direction is clear. This movement reflects growing unease with the global monetary system and an increasing desire to diversify away from exposure to fiat currency. A recent report from the World Gold Council highlights that central banks are increasingly sourcing gold from small-scale domestic miners, often paying in local currencies. This approach enables them to accumulate gold more affordably and discreetly, reinforcing the notion that gold remains a vital store of value in uncertain economic times. Von Greyerz believes the writing is on the wall. While most mainstream voices still place confidence in the existing system, those who look deeper can see what lies ahead: a significant revaluation of gold. As the world grapples with unsustainable debt levels, overvalued financial assets, and increasing geopolitical tension, gold is once again emerging as a trusted anchor. In this context, central banks' quiet gold accumulation isn't just prudent, it's a signal of what may be coming next in the global financial reset. Let's get back to the interview.
The problem is that you cannot get rid of debt. You can cancel debt, but if that debt is back hundreds of trillions of assets, if you put the debt aside, those assets are going to lose the same percentage of their value as the debt does. And therefore, because the debt was backing all of those assets in an incredibly leveraged fashion.
Right.
And therefore, there'll be an implosion of assets. And we know we have bubble assets today. You take central bank gold. Total central bank gold in the world is about 36,000 tons. Not a lot. And the value of that is just a bit over $3.5 trillion. The value of Microsoft is $3.5 trillion. And that shows you one US corporation is worth as much as all the central bank gold in the world that is backing the monetary system. Then you realize that something is wrong in relative values in the world. And then you realize that gold needs to be revalued by multiples to adjust for this total incorrect ratio between bubble assets and real money. And that's going to happen. We're in the midst of it. Since we started in 2002 at $300, advising our clients to go into physical, and then we set up the system, doing it outside the banking system, and helping them buying, storing it in their name, etc., in Switzerland and Singapore. Since then, that was $300. Now we are 3,300, so we're up 11 times. Some other currencies were up more. This is just the beginning. I'm not a gold bug at all, as you know. We just went into gold because I saw the risks in the world. I've always been interested in risk and protecting the downside against the risk that I see. And I saw with the debt growing and during Greenspan's time, etc., and in the 90s, I said that this is going to end badly, like it always has in history,
Right.
without fail. Every single monetary system has gone to zero. So it was pretty easy, and we are, that's why when we started this discussion, it's so fascinating to be watching this because it's happening. It's not, for us in the middle of it. It's in slow motion. When you read about it afterwards in history, say the gold went up 10 times in 25 years. I mean, it's nothing, of course, but we are going to see, as I said, we are going to see it going up by multiple. And this is why we're back to what you and I are passionate about, and that's helping people to preserve wealth. A lot of people, will have a massive inflow into gold, of course, but it's only going to be marginal in relation to the total global financial assets because the gold market can't take it anyway. But if we go from 0.5% of world financial assets into gold to 1 or 1.5 or 2%, that will mean a massive increase in the value of gold, and it cannot be satisfied, this demand, as we know, by producing more gold, because we can't produce more than 3,500 tons from the mines every year. So it can only be satisfied by much higher prices. That's not a dream, that's reality, because we know that, and the central banks are gradually moving their reserve assets from dollars to gold. They're not going to do it overnight. They're not going to put pressure, too much upward pressure on the price. They're going to do it slowly, but that's a move that's going to make gold go up by multiples, Lynette.
Momentum doesn't whisper forever. It eventually roars. Recent shifts in the gold-silver ratio suggest more than just technical adjustment. They signal a deeper rotation within the metals landscape. Silver's break above long-standing barriers is drawing fresh attention, not just from retail hands but from institutional eyes searching for asymmetric upside. Meanwhile, gold remains the quiet cornerstone, subtly accumulated by the very institutions that claim stability in the current order. Beneath the surface, a silent repositioning is underway, revealing a growing reluctance to rely on fiat frameworks and a renewed appetite for tangible value. Could this dual surge in physical metals be the early sign of a coming monetary transformation, one that reshapes what the world considers real wealth? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.